move on to the Nigerian Stock Exchange. We see the market slightly higher at this stage. Joining us for that discussion is Jimi Ogbobine from Consolidated Discounts. Thank you so much, Jimmy, for joining us. The market is definitely in a good place these days. It's up 32% for the year. And I want to get your thoughts, first of all, on how the market's how market activity is developing this week. Clearly, this week is a week short of company results. So your thoughts about how well the market is holding up after that spate of results releases?
Well, the market is holding up quite well. This week, for instance, the major activity or the major economic news has been the MPR, and the central bank held the rates at 12, which was actually market's consensus expectation. So for now, there's no shock actually. There's no extra positive, there's no extra negative that will just distort things. What people are looking at right now, especially value investors, is valuations generally, to actually, so that they can gauge the markets to see if the sentiments that are actually in the market will prevail longer than expected. So some valuations looking expensive, some valuations looking moderate, some valuations looking cheap. Right. It all depends on where you want to play.
Some of the movers these days include Cadbury and Nestle. A lot of people talking about their valuations being steep. But if we move to the banking sector, I want to get your thoughts on valuation in that space, because we're expecting to hear about quite a few deals. Of course, First Round of South Africa indicating that it's not interested in Enterprise Bank, one of the three banks AMCON is selling, but it may show some interest in the other two, Keystone and Main Street. Your thoughts about the kind of deals we may see on the NSE with respect to M&A?
When it comes to the general M&A space, then of course you expect to see lots of deals, especially in the insurance sector. In the banking sector, there will be some major deals, not too many, but at least qualitative deals. You just talked about the First Round deal, for instance. For me, when I heard about the Enterprise deal, First Round's interest, it came as a shock, because anyone who's well aware of Enterprise history from the days of Spring Bank, and even prior to Spring Bank, the 5-6 banks that merged to form Spring Bank, which later got nationalized and became Enterprise Bank, you just wonder, why Enterprise? What did First Round say in Enterprise? I really do not know what has informed management's new decision to look otherwise, but I think the market will actually welcome it. And
I think a lot of people suggest that maybe it's the size. Spring Bank is, of course, the smallest of the three banks AMCON is looking to sell. But if we take it back to the market, we've seen in the past the likes of Diamond Bank and Sky Bank show that appetite to consolidate. Your thoughts about what those companies could do and what that would mean for the stocks? Because if we do begin to see some M&A transactions, is this something that's going to lift equities, or is this something that's going to bring down some of these companies, given the risks involved in M&A?
It all depends on who you're acquiring. If Sky Bank or Diamond Bank, for instance, announce that they're going to pick up Enterprise Bank, it's not going to change anything in their valuations, at least in the short term. Don't forget that way back then, Bank PHB did actually buy up Spring Bank. We've always got to remember that. But if a Sky Bank or a Diamond Bank, for instance, announce that they're picking up Main Street Bank, which used to be Bank PHB, which has got a large banking franchise in terms of branch network, then I think that can actually change the game, not just for their stock valuations in the market, but actually for the bank. It can actually increase their spread, especially for a Sky Bank if they buy Enterprise, if they buy Main Street Bank. And don't forget that Main Street Bank has got some interesting subsidiaries and associate companies, which I'll probably not be disclosing entirely to the market right now. So whoever picks up that kind of bank, for instance, can actually, it can become a game-changing move for that bank on the stock exchange.
All right. So, but how do we play, as an investor, how do we play the M&A news? Do we just wait until we get clarity on who is buying what? Or can we speculate? For instance, like I mentioned earlier, we do know that Diamond Bank and Sky Bank have shown their hand, they've shown their interest in doing M&A deals in the past. Can one speculate and begin to take positions in those stocks, for instance?
Sky Bank has got a very exciting valuation right now. A PE of less than 6. It's a tier 2 bank, even if it's not going to be involved in any M&A deal this year, for instance. Shareholders yesterday gave approval to the board to raise about 81 billion in equity and debt. So actually things are actually looking up for the bank. Diamond Bank as well has gone ahead to London, not as if that would actually change the game for them in a while to come. But management is actually showing some strong ambitions, wider in the M&A space, in capital raisings. So for those two banks, especially with kind of valuations they hold right now, like I said, P's of less than 6, price to book values of around their capitalization. So I think for me, they actually represent good buys right now, especially if Sky Bank can lay its hands on Main Street Bank, then I think it will actually change the game for that bank
All right.
for good.
What about Fidelity Bank? This is a bank that a lot of people have said has significant capital. It has the muscle, if you like, to do some deals without raising too much fresh capital. Your thoughts about that counter?
Yeah, unfortunately, remember Fidelity Bank has a 28 billion and it has about 28 billion in outstanding shares. So it's a fairly liquid stock, could be quite volatile sometimes. And because it's got the ownership is actually quite fractured. So you do not see the kind of core investor who isn't selling like in Nestle, for instance. So the stock does have some potentials, rather the company does have some potentials, but I really do not see it playing out in the stock valuation maybe for the entire year actually.
All right, let's take the discussion outside the banking space and focus a little bit on the consumer space. A lot of people talking about the valuations in that space, but they continue to do well. In fact, if you analyze things, many of the conglomerates are the best performers. In fact, conglomerates are the best performers this quarter, followed by the cement company. So your thoughts about the valuations, they still continue to do well, regardless of the fact that a lot of people say that many of them are already pricey.
It's true, and it's very quite true that they're quite pricey. When you look at Nestle, for instance, at a P of over 30, it's quite pricey. But the sentiments actually dictating prices in stocks like Nestle and Dangote, for instance, are quite different. And I'll explain to you why. Dangote Cement, for instance, Dangote Industries Limited is the core investor in Dangote Cement. It has over 94% equity stake, which means that there's just a public float of 6% for any investor to play in. When you have a block investor who is holding 94 to 95%, who isn't coming to the market to rattle the market with selling or buying, all the market has to play with is 6%, which also goes for the same as Nestle. Nestle has over 60% owned by Nestle Switzerland. So all the market has to play with is less than 40. Out of this 40, you have quite a number of stocks, close to 10% being held by institutional investors like PFAs. Then you have another 10% being held by old money investors, people who bought Nestle at about 100 to 150, I mean between 50 and 150 naira back in the days, who just sit on Nestle because of the honeypot in terms of dividend it provides. So yes, it's true these stocks are pricey and speculative investors have to be a little careful when they want to play in these stocks. But like I said, because of the sentiments of old money investors, core investors, institutional investors, you really do not see this priciness going to create some volatility or price correction, at least in the short to medium term.